Hey, what's up everyone? This is Evan Carthy from evancarthy.com, and as always, if you have any stocks, forex, futures, cryptos, or anything else that's tradable you want me to go over, feel free to let me know and I'll be glad to review it. What we're going to look at today is ADP. If you are familiar with them at all, if you've probably worked in many businesses here in the US, or any business here in the US, there's a good chance that you used ADP for their processing of paychecks and all that kind of good stuff, or basically just the back office type of stuff that they offer. They've been going pretty much straight up for the past couple of years, and so we're going to look into the technical aspect side of it today, and also we'll look at the fundamentals. That will be more so in the blog post, because what this video will be focused on is the technical analysis side for ADP. They're an S&P 500 stock, and as you can see down here in the little description, until 2014, ADP was one of 4 American companies in the S&P 500 to have a AAA credit rating from both S&Ps and Moody's. So we will start looking at them. What we're going to look at today, we're going to use the weekly time frame, the daily chart, and the 1-hour chart to see what trade setups have presented itself. So as you can see, ever since about 2003 or so, what's been going on with it is pretty much straight up, ever since the lows down here of about $21 or so. Price has been going pretty much straight up all the way up to here to about 167. So really right now, the only thing in the weekly chart to look for, because I looked for a couple of short steps, maybe didn't get filled, couldn't really find any. So what we're going to look at is this pink curve right here is the parabolic curve, and I just put it down here at the bottom. You see how it fit nicely, moving up, going up the chart right here. And right now we're just waiting for it to break, and price continues to just keep pushing higher. So when the parabolic curve does break, the first target we're looking at is down here at the 50%. The current high up here is about $171. So if price keeps moving up, we just keep moving the Fibonacci retracement level up with it. Then the bottom mark I use just this low down here around $21, $22 or so. So right now, say this was the high up here, and this was the high, parabolic curve gets broken, high up here at 172.21. So the first target we'd be looking for that would be $96.81. Once it hits that, then we'll consider it the main part of the parabolic curve being complete. Second target we'd look for would be the 76.4% target. That's around $56.90. Now, when you have a parabolic curve break, you don't necessarily, the 76 part of the curve didn't necessarily going to hit, but it is a potential second target. But the first one has to be hit for the parabolic curve, the break of it, to be complete. So definitely this target right here, $96.81, is the main target we'd be looking for. And if you really want to see if you can get a run on it, this would be the second target on here, $56.90, but it won't necessarily. It has to come down here and complete like it does for the 50%. So that is the only setup right now we're looking at, parabolic curve. But until it breaks this curve that keeps on going up over here, it's still in a mighty fine uptrend. So now we will go down here and look at the daily chart. And I found a short setup right here that had not gotten completed yet, using that pivot low, that pivot high. This trade right here is what I call the 8.236 trade right here. And there's 3 main trades I'm using right now in my trades. This one, the springboard reversal trade, and then also the 76.4% trade. I've talked about the springboard in some past videos. This one is a new one over the past couple weeks that I started using, discovered, really like it. And then the other one, the 76.4, we'll go over because that is another setup that we're looking at, and that will be in the hourly chart. So what we look at right here, there's pivot low, using this pivot high. We're looking for the retracement to come down to at least the 38%. That sets the anchor point high, anchor point low, and now we can look at shorting it. So what we're looking at, the first entry is going to be, let me zoom out here a little bit more, is going to be, this is these negative numbers, you add a negative one to them, so it's really 8.236. So it's the 823.6% Fibonacci extension level. When price hits that, which it did right about here, $99.92, we are looking for price to come down to the negative 6.236, which is really the 723.6% Fibonacci extension level at $92.49. As you can see, that never happened and price just came to go up. So the next entry we're looking at right here is the negative 14, which is really the 1,523.6% Fibonacci extension level. But as you can see, price hit it, came down a little bit, but definitely did not come down enough to hit the negative 7.236%, because that would be the new exit level once price hits the green line up here, and price just continued to go up. So if you're looking for this trade right now, this is what I do consider a free trade setup, because even if price continues to move higher, it won't go, your exit won't move lower than the negative 14.236 at $151.30. So the current exit though right now is down here at the purple line, around $9,900 or so. But the next entry that would be, which would be the final entry, would be up here, the negative 21.236 Fibonacci extension level, which is really the 22.236 Fibonacci extension level, because basically what all these are is every time you go up 100%, we're just going into the next Fibonacci retracement level for it. So starting all the way back down here, there you have, you know, the 100% going up to 0%, and then once it breaks that 0% line, you're just going to the next level, then next 100% level, next 100% level. So that's all this is the next 100% levels based upon this move down here. So if price does come up here and hit the 202.75%, then that would move the exit down here to this green line of 151.30. Then after that, you wouldn't move it anymore. Even if price continues to go up for it, that'd be the last time you would move it. But where it currently stands, since price hasn't hit that top green line up there, the negative 21% level, the current exit down here is excuse me, the purple line down here at negative 7.236% Fibonacci extension level, and that is on the daily chart. Get that off of there. Now we'll go down here and look at the hourly chart, because this is going to be another short setup for it. So this one right here is going to be the 76.4% short, and let me show you how I got this set up right here. Let me change the Fibonacci settings for it. So what we look for, there's the pivot point high right there. This is the extension level we moved it on. There was the pivot point low right there. As you see, price came, retraced back up right here to the 76.4% level. Once it did that and came down and hit the 123.6% Fibonacci extension level, that solidified that this is legitimate as a legitimate move. So once that happens, we move the pivot point, the low of the Fibonacci extension level, down here. And so the first entry is going to be the 76.4% Fibonacci retracement level. The exit is 50%. As you can see, there wasn't any type of rejection off at all. The next entry level would be the 100%, 153.53, and you'd move the exit to the 76.4. But obviously it came down a little bit, but never hit it to take it out, so it's still a live trade. And then that is where the current exit is going to be. Now there would be one more time when you could move the exit level from the 76.4 that would move to, and that would be if price comes up here and hits the orange line right here at the 1.618% Fibonacci extension level. If that happens, then you would enter right there, and your exit would move up to the 100% level. But that would be the last time you would move your exit up. Even if price continues to go up, you just leave your exit right there, and of course you could get in if price continues to go up anymore. But so that's the way I trade this setup right here, and that's what I'd be looking for. So if you get in right here, this could be a really good spot, because like I said, currently the exit is still down here at the 76.4% level. So until price hits the 1.618% level, we don't move our exit down here anymore. So Hope that made sense for the technical analysis side of it. We went over 2 of the 3 steps that I use predominantly, or pretty much all I use for my trading right now: the 76.4% setup and the 8.236% setup. The only one we didn't see was a springboard trade setup, but we'll see that in some other videos moving forward in the future. So that's it for now. Take care. If you'd like to see anything else, please let me know. Thanks. Bye.